Are you prepared to trade in any market conditions? Everyone loves a good trending market, buy the dips, ride it out, super easy. But that only happens about 20% of the time. What about the other 80%? Of course, you could sit around and wait for the 20% crazy trending days. We need to trade every day, man. Here are 3 keys to get some solid trades when the market isn't going anywhere. Before we get to that, you need to know that the market's not going anywhere. So very early in the day, you need to identify that you're in a range. One trick for that is looking at the overnight high and the overnight low. And if you are still between the overnight high and the overnight low, you're currently in a range. Compare this chart to this one where there is a clear direction. Lower highs, lower lows, market's going places. But that ain't happening today. So what are you gonna do? Let's check out some of the trades today, and I will give you those 3 keys to success in this kind of market. So far, you got a nice little downtrend, and we're starting to pull back to the EMA. This is a setup that I trade all the time. Nice downtrend, sell the pull back to the EMA, target a new low, and there it is. So are you going to take this short? If you said no, good job, although you did have a 50-50 shot, so maybe you just flipped a coin. But if you know the first key, it would tell you a definitive no on this trade. And the first key is in a range, keep your trends tight. The first wide trend that we had overnight did not have continuation. What makes you think this one will? Keep your trends tight. Instead of looking at these swings here, draw it off of these swings here. See how you have 3 nice touches? When we draw it this way, we can see that the channel already has a break and a new low. And after a break and new low, we expect a bounce. So you would not be taking the short. Sure enough, it never reaches a new low. We are starting to work our way higher. So now we are starting to break right above this high on a nice green bar. We got that overnight high above. Do we buy this and try to ride it to the top, or should we sell right here? Maybe you already know about the second key, which is if you are in a range, trade against the trend. We can even identify a smaller range here, and the trend is going up. Your first thought should be looking for an opportunity to sell. That's exactly what happens here. You get a nice move down. And even if you didn't catch this one, you have another opportunity here with not only a bearish bar right at the range highs, then a lower high immediately following it. Take that one all the way to the bottom. Another great example of this happened today on the NASDAQ, where you can see again that we are in a range structure and there is a trend working right here. First of all, keep your trends tight in a range. This is way too wide. Second of all, trade against the trend. You can look to sell that. We can assume that this trend is not going to hold. This is a trade I took in the live stream today, which you can watch over here, but you're probably too lazy to watch an entire live stream. Check out my shorts for some trade recaps. But anyway, if you're going to take this trade, a great way to structure the risk is to set a stop above the high and look for prices to go 1-to-1. Right when they got 1-to-1, that's when I started trailing my stop and was able to take profit down in here somewhere. So now that you got the first and second key down, let's see if you can apply it. What do you think? We got a nice downtrend starting to break through the range. Are we going to sell this and look for us to take out the overnight low? You said buy, didn't you? You're paying attention. I don't think that was a coin flip. Yeah, this is not a good time to sell. I don't particularly like buying because we do have a nice tight trend. If this were a wide trend, I think it'd be different. You're gonna have to choose between buy and sell here. I'm definitely taking a buy. Would have worked out perfectly, headed up to the top of the range. Now that we're at the top of the range, what are you gonna do? Pretty simple, right? We're gonna sell. You could enter here like I did in the Discord today, which by the way, if you want to join and catch my trades all day long, there is a link in the description. So you could enter here like I did, seeing that we are pretty much at resistance. We got a nice bearish bar, or you could wait for us to make a legitimate failed breakout. which you get right here. Let's say you entered where I did. You want to target around the low of the range, set a 1-to-1 risk so that this thing has plenty of room to work out, and then just let it ride. Now, we got keys 1 and 2 down, but there is a third key that is crucially important for having success. We'll get to that in a minute, but first, we're at the bottom of the range. What should we do? Buy, of course. This has been very healthy, oscillating between the lows and the highs. This is your highest probability bet, is to buy here, targeting near the high of the range, setting a 1-to-1 risk, so this has plenty of room to work out, and then you just sit tight. This market was very slow, so you did have to sit tight for quite a while, and we're dropping below the range, but there's no need to worry yet. We still could have a false breakout, pushing back nicely into the range. And this brings us to our third key. Can you guess what it is? This third key is vitally important because it is going to help you identify when the party is over. Of course, we're not going to be able to just buy at support and sell at resistance all day long. Eventually, there will be a break of that. So how do you know when that's going to happen? And the third key is stay on the stairs. What does that mean? We're looking for a market structure that is going to prove that it will get point A to point B. If we take a look back at all these other range trades, we're going to see a stair pattern. Move up, down, move up, move down, move up. It's like stairs with higher highs and higher lows. And you can see it again on this trade. Market is taking the stairs up. Higher lows, higher highs. And this trade on the way down, same thing. We stayed on the stairs with lower highs and lower lows all the way to the bottom. So great. Now we're long. We're looking to get to the top of the range. We want to stay on the stairs. We get this failed breakout, no problem. We may just have entered a little bit early here. This is still a great failed breakout. That's where we're going to start our stair pattern all the way to the top. So far, so good. We have that move up, and we just need to continue higher. Came up a little bit short there. As you can see, didn't quite make it higher. That's okay. This whole area might just be one stair step, so we'll give it one more try, and then right there, that's when you know that something different is happening. We gotta move up, move down, and this is when we needed to make a higher high to stay on the stairs. But instead, we got two lower highs and then a lower low. We have this pattern working down. So that's when you know the party is over. If you entered here, you can get out at break even, maybe a tiny loss, no worries. But then you avoid this massive sell-off at the end of the day. So remember, most of the days out of the year are going to be like this, about 80% of the time. So keep your trends tight, don't follow trends, and stay on the stairs. That'll keep you on the right side of the market and getting some awesome trades. Catch you guys on the next one.